Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Growth will be the biggest priority in Budget 2023, says Finance Minister Nirmala Sitharaman during an interaction in Washington, D.C. Adds that inflation will be managed but can't let the growth momentum be weakened. Food prices drive consumer inflation higher. In September, CPI clocks in at 7.41% versus 7% a month ago. Industrial production shrinks by 0.8% in August. Fresh buying by retail investors push indices up after 3 days of continuous fall. Sensex up 479 points, Nifty gains 140 points. Investors looking at today's inflation numbers before committing further. Apple and Samsung commit to rolling out 5G software upgrades to their premium handsets in the next 2 months. As the government cracks the whip, Telecom Ministry asks all parties involved to ensure 5G services are available to those with 5G handsets as soon as possible. Big relief for government-owned petroleum companies. Union Cabinet approves 22,000 crores as a one-time grant for losses in sale of domestic LPG. 5-judge Constitution Bench of the Supreme Court asks the central government and RBI to file affidavits on demonetization. Says it will look into whether the government had powers to order the move. It's a big double whammy for the Indian economy. In a major setback for policymakers, consumer inflation has risen to 7.41% in September, much higher than the 7% clocked a month ago. The figure is much above RBI's tolerance range of 2 to 6%. In what is equally bad news for the economy, industrial growth, measured by the Index of Industrial Production, has shrunk by 0.8% in August. As can be seen from this graph, the CPI figure for September is at a 5-month high, fast nearing the April figure after hitting a low of 6.71% in July. The September figure is way above the RBI's estimate of 6.7% for this fiscal. It's also much higher than what the RBI had predicted for the quarter. However, the 3-month average of inflation for July to September comes in at 7.04%, a little below the 7.1% estimate of RBI. Meanwhile, in a big dampener for the overall economic growth, industrial activity has shrunk by 80 basis points in August. The big drag was the manufacturing sector, which shrunk in double digits. Indranil Pan joining us to decode those numbers for us. Indranil, if we really break these numbers apart and understand better the implications, it really seems like it's going to be an uphill task for the government and the regulator to really juggle growth versus inflation.
Obviously, I think that's the struggle world over. Yeah. And most of the guidance that has been put out even by the advanced economy central banks is that they are more intent on containing the inflation pressures in their economy rather than immediately look at growth. Tacitly, most of the advanced economy central bankers are possibly admitting to a recessionary trend, or at least a much slower growth in the months forward. For the Indian economy, I think the good part is that there is a bit of a consumption pull that is happening today, especially as we are into the festive season. But the real test for growth would be beyond the festive season, and also because of the fact that, as data printed by the Reserve Bank of India indicates, the household saving has sort of shrunk significantly for the year ended March 2022 to 10.8 as a proportion of GDP, which necessarily means that the excess demand that was showed up during the COVID period has also possibly exhausted. So going forward, it would be more macro perspectives in terms of the job growth, income growth, etc., which will drive the GDP growth. On its part, the government, I heard you say that our finance minister had promised a budget which is growth oriented. Having said that, obviously there could be certain restrictions and limitations within the budget to push forward further the capital expenditures, given the constraints under which the budget is operating at this point in time, and hoping that inflation falls back to a reasonably better level in the next financial year. the push to the taxes side from the price effect that you see today could also sort of wear out to a certain extent. So these are some of the challenges that the policymakers will have to struggle and figure out where we want to land up. But having said that, I also believe that there is possibly a deadweight loss that the economy is carrying in terms of the COVID hit, and that to a certain extent may be a multi-year phase through which that has to be unwound.
Sure. So, Indranil, what really happens, or where does this leave the RBI then when it comes to increasing rates consistently and that trajectory, given the repercussions on growth? What really do you anticipate will happen next?
Obviously, the inflation is continuing to be a problem, but very critically, it is more the food inflation. It's not really the core which is likely to pull significantly, given the fact that we are looking at some demand compression to happen. From the food side, to a certain extent, as we saw in the last month, there was an upshot in terms of the vegetable prices, more effectively the tomatoes. And during this period, there is generally a seasonal uptick in the vegetable prices. So what I'm hoping for is that inflation should come down in the months forward with the impact of the monetary policy tightening, as well as a seasonal cooling of the vegetable prices. The critical aspect to look at is the cereal prices, where there could be some pressures. Going forward, I do expect, given the fact that the advanced economies, the interest rate cycle remains strong, the RBI would possibly have to, in this cycle of increases, follow relatively closely the external cycle, simply because capital inflows are also at stake, with the belief that current account deficit can actually be at around 3.5 to 3.8% of the GDP, even as oil prices have cooled below the 100 mark at this point in time. And that's mostly because of the exports falling off. So I would expect another 50 basis points in December, and probably followed up by another 25 to 35 basis in February. And it will be more a policy to policy, data to data, sort of an approach that the Reserve Bank will have to take. But in the current scenario, I think that's what we envisage, and look at a peak rate of 665 by end March 2023.
Okay. We've had downward revisions in growth forecasts from some of the leading brokerages around the world. IMF just yesterday cutting growth forecasts as well for India, as well as other economies, major economies globally. What's your sense in terms of where we'll end the year at, Indranil? Do you feel that it's going to be a little worse for the wear in terms of what we've been anticipating, or that we'll manage to ride through?
Our own growth projection for the annual year as annual basis as a whole is about 6.9%. We do see some downside risk, and going forward into the various quarters, I think the last quarter of the financial year could actually lead to a growth of just about 3.5 to 4%. Critical here is to understand how the growth or the GVA from the manufacturing sector pans out, because all the advantage that we had for the manufacturing sector under GVA in terms of expanded profit levels because of belt tightening during the COVID, a lot of it is getting unwound at this point in time. And export-import dynamics also indicate that net trade could be actually negative, or a drag on the growth. So that these are some of the real risks that we are talking to growth. On the export side, obviously, you have a reaction on the domestic exports out of India in terms of the growth globally falling significantly down from levels what we look at this point in time.
All right, Indranil, thanks so much for joining us and taking us through a very realistic assessment of where we stand right now when it comes to the economy.
Thank you.
It will be a 5G-less Diwali for those with some of the most expensive mobile handsets in the country. None of the Apple iPhones, though 5G capable, are able to receive 5G signals. The same is true for several high-end Samsung handsets as well. Nudged by the government in a meeting today to take corrective steps, the companies have assured that their services will be up by December.
Some of the most advanced handsets in the world, with prices up to 2 lakh rupees. Easily handling Gbps level speeds in many countries. In India, iPhones are still transmitting data at a fraction of those speeds. stuck in the 4G era, unable to board the 5G bandwagon. It's the same case with Samsung. Less than a third of its 5G capable handsets are able to catch the 5G signal. This website by Airtel shows which handsets are 5G capable but unable to onboard its network. Interestingly, Chinese brands like Realme, Xiaomi, Oppo, Vivo and iQOO are the only ones who have fully updated handsets. Even OnePlus and others like Motorola, Google and Asus need to update their handsets. The Telecom Ministry has taken cognizance of the matter and today called a meeting of mobile handset manufacturers and telecom operators to sort out the issue, to ensure that 5G services, which were launched by the Prime Minister amid much fanfare, reach the end user. The big problem apparently is that phone manufacturers need to release software updates to upgrade their phones to meet the Indian 5G standards. Apple released a statement immediately after the meeting, saying it will start rolling out the 5G software updates in December. The company is already in talks with telecom carriers. Samsung has meanwhile said it is committed to rolling out the software updates by mid-November.
What is actually needed is a firmware over-the-air upgrade, which is called as FOTA, which will be compatible with all 5G handsets. This upgrade is essential so that 5G can be upgraded by standalone networks and with the existing handsets that consumers have.
Meanwhile, Airtel has already announced that its existing SIM cards will work with the 5G network. The telco has also announced that consumers will be able to use 5G services at their existing 4G tariffs. However, a lot of those hoping to take advantage of this introductory offer will not be able to do so. With Karishma Asudani, Bureau Report, Business Today TV.
Internet download speeds on the 5G test network in the country have reached 600 Mbps in some parts of the country, according to Ookla's latest speed test intelligence report, with the survey adding the national capital enjoys the fastest 5G network.
5G services were launched in select Indian cities by Prime Minister Narendra Modi on the 1st of October. A survey by Ookla shows the 3 5G operators are still calibrating their networks, ensuring they are stable as they go commercial. There is huge volatility in the network, with 5G download speeds ranging from 16 Mbps to 810 Mbps in tests conducted since June of this year. In Delhi, Airtel reached median speed of 200 Mbps, while Jio shot at nearly 600 Mbps. In Kolkata, Airtel lagged at just 34 Mbps, while Jio had a faster speed at 482 Mbps. In Mumbai, Airtel reached 271 Mbps compared to Jio's 515 Mbps. In Varanasi, Airtel was ahead with 517 Mbps versus Jio's 485. Though the 5G speeds are still well below the 1 Gbps standard set in several countries, it is still much above the current 4G data transfer rates. Consumers, meanwhile, seem ready to embrace 5G. The report shows 51% of the respondents already have handsets which support 5G. The top 5G capable handset brands include Samsung, Xiaomi, Realme, Vivo and Apple. And though Apple handsets aren't compatible with 5G in India yet, according to the Ookla survey, the iPhone 12 is the most popular 5G capable device in the Indian market. Meanwhile, the Department of Telecom today met with various handset makers and network operators to prioritize and release software upgrades for supporting 5G services. Bureau Report, Business Today TV.
Wipro, meanwhile, has registered a 4% rise in its net profits quarter on quarter. The company, which has been embroiled in the moonlighting controversy, reported a quarterly profit of 26.6 billion rupees. Its revenues rose 5% on quarter to 230 billion rupees. Wipro's IT operating margins are up at 15.1% this quarter due to better pricing and efficiency. The company net added 605 employees during the 3 months to September. It, however, had a very high annual attrition rate of 23% during the period.
We recorded 4.1% growth in constant currency terms sequentially and 13% on a year-on-year basis. That translates into double-digit growth across all markets. Business growth translates into growth for our colleagues. I am happy to share that we rolled out quarterly promotions to our employees in July and salary increases effective September. And yet, we've achieved operating margins of 15.1%. As we continue to enhance our portfolio with the newer and more strategic service offerings, our clients are recognizing the value we deliver. This is increasingly reflected in our improved price realization as well.
Two major IT results today, the first of which is HCL Tech. The company reported a 6% quarterly rise in net profit to 34.9 billion rupees. The revenue has risen 5% sequentially. Announcing a 10 rupee per share interim dividend, the company has raised its sales guidance for this year. It has, however, trimmed its EBIT margin guidance by 1 to 2 percentage points. HCL has grabbed new deals worth $2.4 billion in the July to September quarter and net added more than 8,000 employees to its rolls. Its 12-month attrition rate remains considerably high at 23.8%.
We've had a very good first half. We've had excellent bookings in the first half, which will result in good revenue growth in the upcoming quarters. And the overall pipeline and the visibility that we have for the next year will be reflected in the exit numbers for this. So all of this looks good. We are cognizant of the external environment, but we are focused on our clients, the opportunities that we are pursuing and how we can execute, and that gives us all the confidence to take this forward.
Attrition, we are in a good space now. If you look at previous 4 quarters, you would have seen every quarter there's been an increase in attrition, whereas if you look at the reported numbers this quarter, it's pretty much platted out, same as what we had last quarter. So it's already stabilized, and that is the early indication of where we are in terms of what we look forward to from here on. So we're in a good place there.
Stock market snapped a 3-day losing streak today as investors bought shares of financial and consumer good companies. Retail investors reportedly led the buying, getting D Street to outperform its Asian peers, which mostly ended lower. However, with consumer price inflation expected after trading hours, there was a degree of caution as well. Sensex closed 479 points higher at 57,626, while the Nifty was up 140 points to surpass 17,100. Among the big Nifty gainers, Power Grid, Coal India, Axis Bank, Bajaj Auto and NTPC. The Nifty losers were led by Adani Enterprises, Asian Paints, Dr. Reddy's Labs, Bharti Airtel and ICICI Bank. Let's take a very quick break. Back with more on the other side.
Make your media plan smarter with India Today Live TV on your connected devices.
Welcome back. U.S. Treasury Secretary Janet Yellen will travel to India next month to attend the 9th edition of the U.S.-India Economic and Financial Partnership. Announcing her travel plans after meeting with Finance Minister Nirmala Sitharaman in Washington, D.C., Secretary Yellen said the two countries were committed to working together on economic development. The meeting focused on a range of issues, including bilateral relationships, the global situation, as well as India's upcoming G20 presidency. In a rare comment about a forthcoming budget, Finance Minister Nirmala Sitharaman has said the next year's budget will focus on economic growth. The FM also addressed various other issues in an interaction at the Brookings Institute in Washington, D.C. Let's listen in.
The growth priorities will be kept absolutely on the top. Even as I speak about the concerns that inflation brings before me. So inflation concerns will have to be addressed, but then how would you manage growth would be the natural question. But that's the point of, being sure how you're going to be able to balance the two and be sure that the momentum that Indian economy has got coming out of the pandemic and the momentum with which it will grow even the next year, even as per the very many multilateral institutions which are observing India, cannot be weakened. So it will have to again be a very carefully structured budget in which the growth momentum will have to be sustained. Energy, fertilizer are all becoming expensive. As a result, in some parts of the country, not so much for us, there is severe food insecurity. We are in a position to export. But if our input costs are going up, or if our farmers themselves come under stress, export and the global understanding, multilateral institutional compulsions don't help in exporting food that easily. And this is a bane of some understandings which have been given a play since the Uruguay round. And we've been in every WTO meeting talking about it, saying it shouldn't be so. Those who were working in different heavily industrialized parts of the country, they themselves coming from different parts which are not so industrialized, who generically are being called as migrant laborers, went back to their villages. All of us knew about how they went back. Some of them went back with the trains which were provided, others found their own way. But when the pandemic subsided, and when they had all been given also the vaccinations, many of them didn't go back to their old employees. They went looking for better jobs and found them, and therefore there is this good churn that is happening in the Indian economy, and therefore the government's effort for skilling and upskilling is also being ramped up now. And the nature of employment itself is now also getting very speedily ramped up. And that is why I'm not surprised, and I'm glad to quote, Honorable Prime Minister mentioned that India probably can lead the Industrial Revolution 4.0. I have engaged, Prime Minister himself has engaged with the startups to know what they want from India, and we kept as much as possible addressing their concerns. Now, as a result of which, not purely as a result of which, but also because of which, you saw unicorns coming to reach 100 in number within 1 year of 2020 and 2021. All at one go, you saw one after the other. Now, I've heard this from others as well. They're moving to Singapore, they're moving to UAE. Well, if they want to talk to the government of India and say, look, we were moving to Singapore, but if you were to do this, we'll quite happily be here. And if after hearing it, if it's possible, we'll certainly attend to them. So I would think continuous engagement with the startups is what is going to help for them to, one, remain and do better within India. But if there are temptations for which they would want to go outside, we need to understand how much we can entertain and serve on those cores. Not all of them are possible, but equally we can try. Singapore, UAE have all come forward now to make RuPay acceptable in their countries. Not just that, the UPI, the BMAP and everything else, NCPI, are all now being worked in such a way that their systems in their respective country, however robust or otherwise, can talk to our system, and the interoperability itself will give strength for Indians' expertise in those countries. We are working together with several countries.
In a huge step towards monetization of government-owned land, Indian Railways today issued a new policy on leasing of its land. The policy, which was approved by the Cabinet last month, seeks to bring more private participation in public utilities and cargo terminals, giving a big boost to the government's Gati Shakti scheme. It will also clear a major roadblock for the disinvestment of Container Corporation of India. The policy lowers the annual rent on leased land for new cargo terminals from 6% to 1.5% of market value of the land per annum. It also increases the tenure of the lease to up to 35 years with an annual escalation of 6%. The policy allows for long-term leasing of railway land at a nominal fee of 1 rupee per square meter per year for setting up public services such as schools, health services, all under the PPP mode. That's all we have time for on the show tonight. Thanks so much for watching.
Fashion industry is all about new designs, styles and creations. Well, now fashion designers have a new playground for their creations, the Metaverse. This digital world where, thanks to an avatar that gives us a virtual twin, we can evolve and act just as we would in the real world. We enter it through wearing a virtual reality headgear or by watching a computer or smartphone screen. The Metaverse is a space for experimentation and testing out new products, allowing designers to push the boundaries of their creativity. This has economic advantages too. By testing out their collection in the Metaverse, they can then analyze public reaction in it and adapt demand accordingly to avoid surplus production and unsold items in the real world. In other words, an eco-friendly approach. For other designers, their creations will stay digital. On specialized platform, brands commercialize their virtual clothes by attaching to them an NFT or a non-interchangeable unit of data stored on a blockchain that can be sold and traded using cryptocurrency. This kind of marketing saves brands from their worst nightmare: fakes flooding the marketplace. With the second-hand market booming, reselling a pair of virtual shoes associated with an NFT will give the designer royalties on each transaction. Some brands link a virtual fashion item with its counterpart in reality.
Make your media plan smarter with India Today Live TV on your connected devices.
Hello, you're watching India Today. I'm Aishwarya Paliwal. Let's start the bulletin with the headlines. The main accused in the Kerala occult murder, Shafi, has been arrested. Cops say Shafi was a pervert and a psychopath who brainwashed the couple into occult practices and alleged cannibalism. In an exclusive interview to India Today, frontrunner for the Congress presidentship, Mallikarjun Kharge, takes on Shashi Tharoor. Asks, where was Tharoor when I was a block chief? He says that Tharoor cannot judge him. Language war reignites. Southern Sartabs accused the Modi government of attempting Hindi imposition. After Stalin's challenge, Kerala CM now seeks Prime Minister Narendra Modi's intervention. With Saurav Ganguly out of the BCCI, TMC alleges a conspiracy, says BJP wanted Saurav out because he did not campaign for the Saffron Party. Madhya Pradesh Home Minister raises objections to the new ad which is featuring Amir Khan and Kiara Advani. Hindu groups claim the ad hurts Hindu sentiments. In the state of Kerala, an unbelievable tale has come to the fore. 2 women were kidnapped, killed, their bodies were chopped off, cooked and eaten. And all this happened because one couple wanted to become rich. Now the accused did so at the behest of a tantric. Superstition, perversion and cannibalism. This is no fictional crime thriller. Shibi Mole reports on this horrific story that has stunned the entire country. Take a look.